Show us the fucking money. It's time to lay it on me. Cause what's mine is ours. This shit belongs to the army. Gon' need to see them Benjis. We hungry for them tendies. Give us this day our daily bread. Show us the fucking money.
This ain't financial advice, just a little DD to help you think twice. We hold for each other, eyes on the prize. The new floor's 200,000 times 5. I joke, I kid, no, I don't know a damn thing. I'm the simplest bubble trying to sell some damn shrimp. Can't spell IQ, can't even count to 10. And I eat crayons every day with my friends. I think about Kenny in his ivory tower, shaking in his lily boots as the apes overpower. Must suck to lose to monkeys, so dumb. But you made your bed and you got nowhere to run. I'd love to be a fly on the wall when he makes the prize fall. And he watching as we keep buying more. You forgot we on the float, blind 2 hours old. Lie, stop breaking the law, asshole.
Show us the fucking money. It's time to lay it on me. Cause what's mine is ours. This shit belongs to the army. Gon' need to see them Benjis. We hungry for them tendies. Give us this day our daily bread. Show us the fucking money.
Yeah, crayon eating Lambo loving spook brain, stupid ass. Throwing all my money at the streets like a quarterback. If you don't mean a thing, water up a duck's back. Apes not leaving nothing till we get the money stacks. Monkey see, monkey do, monkey holding to it blue. Monkey magic coming through, through us monkeys on the moon. Double digit IQ, tendy loving bamboo. Right here we got more smoothies than a jumbo juice. Probably thought you coulda made us sell all the gooder. In hell we maybe woulda, but we more than the Buddha. The floor 6 figures ain't selling for less. You took on the ape nation and you're fucking with the best. We hold for each other, my sisters and my brothers, the fighters and the lovers. We don't need another fan because we huddle through hard times and struggles. Cause we're just a couple of dummies in the rubble.
Show us the fucking money. It's time to lay it on me. Cause what's mine is ours. This shit belongs to the army. Gon' need to see them Benjis. We hungry for them tendies. Give us this day our daily bread. Show us the fucking money.
Moon gang.
Hello, everyone. Stand up, work on those 6-packs. I gotta stand on this one because I'm feeling a bit feisty. We're coming out of the gate swinging. We have a lot to talk about. I dove into some really interesting things during this break, and I'm excited to bring it all to you. I mean, look at that title. We're going to be talking about the SEC infighting. We're going to be talking about Citadel versus IEX, or let me put that another way. We're going to be talking about a piece of shit market maker against a lit exchange that's trying to do some public good. And then, of course, we're going to lightly touch on just kind of what's going on in the market. We'll do some levels of support, resistance. I think the noteworthy thing out of today is that Bitcoin is ripping. In fact, as I'm talking right now, 63,000. It's about $1,500 off from an all-time high. So before I get into my hot tamale rants, just so you know where we're at, AMC currently trading at 42.20, kind of flat, sold off, flat, not too exciting, volume a little bit light, nothing too crazy going on there today, but remember we had 4 green days, it's okay to take a breather. GME also just, tighter range, kind of range bound, not doing too much, currently trading just below 187. I'll give you the short interest numbers just so you know where we're at, and then let's hop into all the good stuff. So for GME, can't stop, won't stop, GameStop, net borrow of 200,000, short interest estimated to be at 12%. And for AMC, net return of 2.66 million shares. Remember, to return shares, it's either shares that were never short or they were covered 2 days ago. T2 settlement finally being returned today. That's how to interpret it. But they did actively borrow 1.95 million against it today. Short interest estimated to be 16.5%. In terms of the overall market, we're at 450. SPY's looking strong. Qs are looking strong. IWM looking a bit weak. So the tech sector and the overall market looking strong. The Russell 2000 not struggling. It's still technically green on the day, but just on a relative basis, not looking as good. Okay, so that's kind of your breakdown of where we're at, what's going on. We have about 57 minutes in. We're in power hour. We're feeling power, and I'm not gonna lie, I'm feeling like a hot tamale as I started to uncover things during this break. And let's start this really all off with, I want to touch on the GME SEC report once again. I know many people, they felt underwhelmed, very, very underwhelmed. And if you really think about it, the SEC, a lot of power, a lot of resources, a lot of data, a lot of overarching reach of what they can and can't look into. And a lot of us we're reading this GME report backwards, forwards, inside out, couple different languages. And the conclusion is always just, what the fuck? Like, what are we doing here? Like, it's just, it was a long definition. It was a nice essay, a college paper of what's shorting, what's a gamma squeeze, a little bit about a market structure, a couple pages in there of interesting data that the public didn't really have until now. And that, I think it should be mulled over. But if you take a step back, I think it's very fair to have the question of, well, why? This has been going on from February until now when they announced it, and even the report was delayed. Why does it, like, we all have that gut feeling that something's off, and maybe it wasn't the most prominent good faith effort, I guess is the best way to articulate it. And this is kind of interesting. You can find this was also posted yesterday, October 18th, right? That was yesterday or today? Yeah. So this was posted yesterday. And remember our Charlie Gasparino, dipshit Charlie, he a little bit ago tweeted about some like SEC infighting, and that's why it was delayed, because they couldn't agree upon the conclusion of the report. Well, all of a sudden, you have these two people. It was just they posted it the same day. Two commissioners from within the SEC below Gensler. Statements on staff report on equity and options market conditions in early 2021. That's the exact title. So these two people, Hester Pierce and Elin something, I don't know. I'm probably butchering that name. Hey man, Mr. Commissioner, if you're listening to me right now, I apologize. That's a very funky name. But I don't ever really like to give too much credence to Sorry Charlie, because he basically rips off YouTubers, and when he's doing his own research, he just lies. But all of a sudden, it looks like there might be a little bit more of a bearing to this concept of SEC infighting, and maybe gives us an argument that the conclusion of the report of what they could do may be a little bit stymied from some political fractions within the SEC. Check this out. You can find this. This is on the SEC's website. Here's the title. Search it, blah, blah, blah. Here are the interesting things. And what I'm really getting to, TLDR, is I think that these two might kind of be leading a little bit of an anti-movement away from maybe what investors actually want. Worthwhile to probably do more of a deep dive into these two. I didn't have time, and I'm going to really bring together some of my thoughts on it at the end. But check this out. This is what these two wrote. Hester and Elid. The report, however, finds no causal connection between the meme stock volatility and the conflicts of interest, payment for order flow, off-exchange trading, wholesale market making, or any other market practice that has drawn recent popular attention. We have seen no evidence that these practices were a cause of these events. So that's a little weird. They're saying, what? Nothing to see here? Like all of it, just across the board. They're like, okay, no, payment for order flow, off-exchange trading, wholesale market making, or any other market practice. They're saying, nah, no way you could draw those conclusions. So I think that's a bit interesting, but hey, let's just keep going. A full and fair consideration of both the operation of our complex equity markets and previous commission actions is critical to avoid pulling too tightly on the wrong thread. That's weird. Think about that wording. They're already setting it up as like, hang on, maybe we shouldn't look into certain things. They have a really weird metaphor about a sweater. Be like, hang on, like the woven threads, if you pull one, it can mess up the whole sweater. And obviously, like, look at these two. They're clearly fashion forward. So I do appreciate that they got a sweater metaphor in there. But they're already setting it up as if a certain subpart of the SEC, they're like, we shouldn't look at that. And that right away really like gets some red flags going in my head. Past commission and staff statements acknowledge that many benefits wholesalers can provide to retail investors. Very interesting. Right there, it almost seems as if they're trying to protect wholesalers, as in Citadel, Virtu, and other major market makers. Well, those two are the main two. But right there, they're trying to protect it. We should not neglect to do so in our current analysis of market structure. And then, of course, they just wrap it up of like, trust me, bro, got your back. We always should be on the lookout for ways to improve our rules and our markets, but we must move with the utmost care to ensure we do not harm investors and impair markets that are integral to people's lives and retirement, as well as the U.S. economy. Investors and issuers, whom the equity market is after all here to serve, deserve nothing less. First of all, I think it's weird that they went out of the way to call out issuers, but other than that, not harm. I mean, that, I don't know. I don't have a Merriam-Webster dictionary in front of me, but that's an interesting definition of harm, because I would say it was financial harm of what occurred in January/February of this year, as in billions of dollars that you, me, other retail traders and or investors, specifically in GameStop and these other moon stocks that were popular at the time and remain to be popular today, I would consider that a form of harm. And they're saying that out of this entire report, we don't want to harm anyone, but there's nothing here that shows any wrongdoing by anyone at all. And to maybe some of the people in the back who have been sleeping during class, I mean, no wrongdoing. The entire retail trading public was stopped from buying stocks that they wanted to buy. How could it be any form, whether you're retail or not retail, if we're pitched this concept of it being a free market and we're just completely making up the rules of supply and demand as we go, as it fits the cronyism of Wall Street insiders. I mean, super, super suspect. So for here, we're seeing, to me, I think there's way more to this story. And I know that that's always Wall Street. It's never like you're just at the tip of the iceberg. But for the people who are particularly upset about the lack of quality and lack of information and lack of conclusions from the staff report on equity and options market conditions in early 2021, I find it very, very suspect. My red flags are going off. My spidey senses are going off. My duck senses are going off. Very interesting with these two. And very, very quick reminder, to the best of my ability, to the best of my knowledge, I should say, remember that there is no rule whatsoever that there's no gardening period. There's no stop between going from SEC, a public service, to private industry. You don't have to wait. There's nothing. You can go, and it's one of those things of like, hey, you never know. And this is a complete me throwing a theory out there. I don't have the evidence of this. I need to make that clear. But things have occurred in the past where it's you make some rules and you play nice with Citadel now when you're on the regulatory side. Couple months, couple years down the road, nothing stopping you from getting a job there. We've seen that before. I mean, think about it. You have an intimate knowledge of regulations. You can currently create regulations if you're on the SEC side. And then from there, you have the network of when you're working in the private industry. I would not be surprised in the slightest. Let's look at the future. Let's see their connections to these Wall Street establishments. And when they go to the private industry, they might add a couple zeros to their paycheck and they're just playing nice now to set up that job down the line. Something very worthwhile to look into. Find it fascinating. So with this, I mean, obviously my own potential or my own very specific interest in what is or isn't going on. I am going to be interested in these two, seeing their relations to Robinhood, Citadel Securities, and to see how all that plays out. So just wanted to talk a little bit about the SEC infighting. Another thing we could talk about is Mr. Dave Lauer here. Next week, there will be a hearing in the case where Citadel is suing the SEC over the IEX delimit order type. I wrote an explainer here, very good explainer. We will be going over it. You guys know me. I'm not the biggest person on reading Reddit and showing off Reddit. But whenever Dave Lauer writes something, I find it to be very, very useful and positive. And I feel like I learned something. I feel like the community learned something. I am very, very well aware. I've recently made a video that states, what's the point in just hopping on the hottest hashtag of the day? For example, we just see ban this person's lie. We see all that. And one that I think is going to be not a bandwagon and actually useful for me, for you, for the market at large is this one right here. Citadel is not retail. Hashtag Citadel is not retail. I think it's going to be very important this week and particularly more important next week. Let me explain why. Let me talk about what's going on. Mark your calendars. IEX, an exchange, a lit exchange, which it's kind of a smaller exchange. I believe it was founded in 2012. There's a good book written on it, Michael Lewis, Flash Boys. Check it out. I recently did a podcast with them, just so you know. I think that actually is coming out tomorrow, October 20th. I'll share the link and everything. But became a national security exchange 2016. Very, very interesting. So just so you know, a little bit of the background on IEX, founded 2012, became an exchange in 2016. Their entire mantra in the book Flash Boys was, we see a lot of weird things going on with high frequency traders. They went to fight against latency arbitrage. There was many people who were abusing stock market plumbing, and they were just faster. They were the Usain Bolt of trading. They knew stock market plumbing intimately. They never really carried any risk. That's high frequency trading, just very, very fast. IEX basically came in and they tried to fight that. They tried to, in certain ways, use different orders and different techniques to provide what's referred to as a speed bump to battle these high frequency traders. And right now, they are going to the mat. They are going to the legal mat with Citadel Monday, October 25th. So in 6 days from now. Just a little bit about IEX. You can check out their website right here. These are all the national security exchanges. There's about 16 lit exchanges. I would argue 12 of them are like serious ones. As you can see, there's repeats for the various things that they are or aren't doing. But Investors Exchange LLC is IEX. And then this is their main website. So going to the mat with Citadel. Citadel, whenever I see this lawsuit of like Citadel trying to do something, it's going to make me very, very interested in what is or isn't happening. Well, this one is particularly all about delimit. Discretionary limit, a delimit, it's a type of order. So like the way you have the various orders, market orders, stop, blah, 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 it goes on and on. Delimit is a very fancy schmancy one where you got to put on your the way they created it is they basically just plucked all these fancy schmancy mathematicians and are like, we need to make it better. And here's what you need to know. Delimit behaves like a regular limit order, except when the IEX signal, which they're using a CQI, a crumbling quote indicator, predicts that the price is about to change. This triggers delimit orders to automatically reprice to 1 MPV, minimum price variant of 1 cent for most stocks outside that level. So here's what they're doing. You're doing a limit order and they're continually monitoring, seeing what's going on. And if they're about to predict a price change in your favor, they're going to automatically update your order and get you that better fill if they see that basically all of these sharks, the high frequency traders, are about to run rampant. So that's an improvement, and we have the stats behind it. I would highly recommend checking out these two articles written by IEX. Delimit, one of these things is not like the other. So this was written in February of this year. I found it very, very interesting. In the article, they're literally saying, hey, we want more trading done on lit exchanges because it's better for price discovery and various other reasons. But anyway, this delimit order, here's the stats on it. So what you need to know is it was announced in 2019. And when you have a whole new order, it can get drawn out a while in terms of the SEC. And here's what happened. Through my research, I was finding that 2019 to 2020, it was just being discussed. Why? Because it kept getting pushed. And you know who was pushing it? Saying, no, you can't allow this? It was Citadel. So the 1 year wait was the maximum possible wait they could have done. And at the end, IEX prevailed, like the smaller exchange beat out big old guy Citadel. And SEC's like, okay, finally this can go live. So right now, these delimit orders have been live for an entire year, 2019 to 2020. They were waiting it out. It went live, I believe, in October of 2020. And then from that moment, right now, Citadel's trying to bring it back up. Citadel pulled out every single stop possible to get the delimit from being a live exchange. And it's weird, as I'm about to show you from some of Dave's posts, Citadel's like, oh no, like we represent retail. Like we are fighting for retail. That's like, imagine if Facebook just came on and be like, no, we're collecting your data for your good. Like, it's just a crazy argument. But as you're about to see, the improvements, it's all across the board. And I'm not going to go over every single word about this, but look at IEX delimit beating all these other exchanges. Once again, depending on how you want to look at it, this delimit order, it's superior. Not necessarily the best in this one, but out of what, the 4 or 5 graphs I'm showing you, IEX is the top in terms of this delimit order for various ones. And then they did a follow-up. This was when it was getting going, and that first one was how they were talking about it going live. And then this delimit, they were talking about more of like the follow-up of how it's been going. Once again, the metrics are very impressive. So for more of my math-based viewers who will like want to dive into why this is or isn't good, then the truth is in the numbers. There's no other way to put it, but delimit, they did what they set out to do. Delimit, all about they're predicting that something funky is about to go on. They think they could get you a better fill. They get you a better fill. It's a limit order that is trying to stop latency arbitrage, another way for them to battle high frequency traders. So check out these 2 blog posts by the company themselves. And it's very, very interesting to me, because it seems like we're in this world where we're continually seeing the mantra of Citadel, they're going to lie. I mean, if you go all the way back to IEX just getting started as an exchange, Citadel has been fighting with them from the very start. Like they literally campaigned that IEX should not be an exchange. Since before day one, let's go into negative time. That's how long Citadel has specifically been fighting with IEX. And for me, maybe I'm like, I don't work at IEX. I have nothing to really do with them. I did a podcast. I had a great time, but I'm just seeing the same thing almost that we're fighting for, of the David and the Goliath, the small guy taking out the big guy. That seems to be IEX. It's a smaller lit exchange trying to battle and do the right thing for everyone who's using the exchange, whether traders and or investors. And Citadel sees that the direction that IEX wants to take the market, as in beneficial for everyone participating in the market, but maybe not necessarily market makers, making it more difficult for them to be profitable. That's why Citadel's fighting with them every single second of the day. Literally before they were an exchange, Citadel already had a problem. This just seems to be the continuation in a litany of legal battles between the two. And when I pair it up like that, it's like, well, okay, I get that we're all going to be supporting IEX. It makes a lot more sense. But Dave Lauer's write up, you can find this. He posted it, D. Lauer. It's on Supersonic. Citadel's lawsuit against SEC over IEX's delimit order type. Very, very crazy. So with this, I just want to clarify, Citadel has already campaigned against delimit. They lost that fight with the SEC. And now, this is actually kind of crazy. Citadel, to my understanding, is suing the SEC, saying that the methodology and the due diligence they did to approve this delimit was wrong. Like, they're just pulling out every stop they possibly can. And if you really look into it, it has me a little bit concerned because, well, actually, let's get into it, and then I could show you like what I find to be particularly concerning. In 1 week, remember Monday, October 25th, a panel of judges will hear oral arguments from Citadel, the SEC, and IEX in a lawsuit that Citadel has brought against the SEC regarding the delimit order. It's worth mentioning that Virtu wrote a comment letter in support of delimit. I've interacted with Virtu quite a bit over the years, and I've generally found them to be more flexible and supportive of innovative market structure efforts. Once again, these are all the words of Dave Lauer. This is where it gets really funny. Remember how Citadel basically has been having a meltdown on Twitter, and they're like, look at us, we were the only one providing liquidity, we're so great. And like, they always act as if they're on our side, but like, that seems a bit crazy. Just remember, the people who allegedly have our side, they accuse us of being the same level of believing Americans have never been to the moon. That's the same Citadel that we're talking about, like having our back right now. Does Citadel trade on your behalf? Do they represent retail investors or traders? Do you think that the brokers that Citadel or other wholesalers pay for your order flow represent you either? Obviously not, because Citadel and all of those brokers hold themselves out as representatives of retail investors, as if they are incentivized to protect you and ensure that the market is designed for your benefit rather than theirs. This would be a hilarious joke if it wasn't the truth. Don't forget, not that long ago, Citadel paid a $22 million fine to the SEC for misleading clients about pricing trades. Obviously, there's a lot more info in here, all the blogs and everything I'm going over. If you guys are more interested, I wholeheartedly ask you to look into it a bit more. I'm just trying to give you the highlights of the scenario of what's going down. IEX as an exchange was built to counteract the impact of latency arbitrage. This is extremely overly simplistic. Like I said, they started in 2012, really got rocking as a NSA, National Security Exchange, in 2016. And hey, they're the little guy on the block, but I truly believe that they are fighting for a better market structure and a better market system. So for the people who really want to know what's going on, IEX developed something called a CQI, a crumbling quote indicator. Now, if you read some of his write-up, it's very, very fancy schmancy. This is like literally PhD mathematic level stuff. And it's actually very similar to how high frequency traders, how they do their thing, how they make their money. So IEX is doing it, reverse engineering it the other way to help predict when this latency arbitrage could happen. And that's how they help people make better positions. So the CQI, it watches price feeds and supply demand in order to forecast when an impending price level change is coming. When the indicator fires, some IEX order types don't trade. They wait to be repriced to the new price level before being able to trade. This reduces the opportunities for latency arbitrage. The delimit order type is one of those order types. It is a tool that IEX created to protect investors from latency arbitrage, and it uses the same technology that high frequency trading firms use in order to do so. Like I said, they're reverse engineering what HFTs do, and they're trying to get you a better price fill. It's that simple. What's crazy about this CQI thing, you could see it on their website. To my understanding, it came out in 2014, and it seemed like they were continually updating CQI every year, and then it just kind of stops. It stopped in 2018. And I was like, oh, okay, that's a bit interesting. And then 2019 is when they announced delimit. And then that's when Citadel blew a gasket. So I'm seeing all these updates to CQI, just improving it, because remember, the market is not static. It's very, very dynamic. So they have to continually improve it to be able to battle these other high frequency traders. But the updates just stopped. And I was like, oh, okay, that makes sense. 1 year later, we have the delimit. And then that was tied up in courts and legalese and bullshit with the SEC for about a year. And it went live. It's been live for about a year now. I just showed you all the improvements and its quality that it had. But to my understanding, the CQI, the inherent thing that delimit's based on, delimit comes from CQI, just so everyone knows, not being improved. And it makes me wonder, is Citadel so incredibly corrupt that they're going to bring in lawyers, legalese, and the SEC to stymie the development of better market structure, better market mechanisms? Because right now, I'm not seeing any more development on it. And I'm assuming with IEX on a relative basis being like the small kid on the block compared to Citadel, I'm assuming that either their resources are tied up, or they're worried about improving on it. Maybe it makes their legal case a bit worse. I don't know. I'm not a lawyer. But what I can see is that Citadel is mudslinging, and they're stopping the improvement of the overall markets. Let me continue. So if Citadel is suing the SEC, there must be a lot of firms that oppose this order type, referring to the delimit. Nope. Was it a controversial approval when the SEC approved it? Nope. It was a unanimous vote by the SEC commissioners. Not only that, the firms that support IEX in this innovation actually represent the interests of retail investors. So the SEC, I mean, they approved it. It was unanimous. And then they had all these other people who were like, no, delimit's good. 33 asset managers, 14 pension funds, and just huge names. Vanguard, Capital Group, Virtu, Stevens, Goldman Sachs. Just so many were like, this is in support of delimit. Even XTX, I believe that's another high frequency trader. Market believes IEX delimit right here is one of the largest you even have high frequency trading firms saying, no, this is a good development. It seems like the sole party who does not want this to get out there is Citadel. And if you're seeing a sole party such as Citadel trying to not get something out, almost inherently makes me in support of it. And right here, this is kind of interesting. So you can see some of the arguments from Citadel in this whole debacle. And the SEC, even the SEC isn't buying the idea that Citadel trades on behalf of investors. Citadel is not directly routing the customer order to exchanges, but rather is, for example, buying shares for its own account and selling shares. That's Citadel. Citadel has legitimately said in like a regulatory body that they're trading for investors. They're arguing that Citadel is for retail. And I don't need to tell you guys, but the opposite is actually true. The SEC defends itself overall by explaining that it agrees with IEX and there's a latency arbitrage, and that is a problem for liquidity providers on IEX. But the overriding issue is one of the incentives and representations, and it seems obvious to me that IEX deserves retail support in this fight. So there is a TLDR that explains it. So basically, what you need to know, high level, IEX is a small lit exchange that has come up with a very fancy order type that helps battle latency arbitrage, which is one of the main mechanisms that high frequency traders use to make their money. And they're saying we can battle against that and get better fills for our clients. That's what's been going on every single step of the way, not just this delimit thing. It seems like every time anyone at IEX takes a breath, Citadel's like, I'm suing you, I'm suing you, I'm suing you, illegal, illegal, illegal. Citadel is very much against IEX. I mean, there's a litany of court cases, SEC cases that prove all this. And with it, I mean, I don't know. I'm not a lawyer. I can't tell you which way this will or won't go, but I know that the court case starts on Monday, October 25th, and Dave Lauer is bringing this up. And I think between now and then, maybe on the 25th, I would love to get this rocking, because Citadel is not retail. Their argument is that they are in support of us, that they represent our best interests. I don't buy it, and I don't think any of the actual facts buy it. I think it's just a silly argument that like they just put out there because like they're just trying their damnedest to like make it act as if it's true. But yeah, I think on Monday, October 25th, when the court case starts, we should look at this. Citadel is not retail. And what I will be doing in the back end, if possible, because I had the privilege to be able to talk to IEX on their podcast, I'm going to see if one of them would be willing to come on this show and to explain the court case to us, to explain if IEX, their thoughts on retail, their thoughts on Ape Nation, their thoughts on AMC, GME, the SEC, all of that stuff. I'll reach out to them and see if they have some time for one of their people to like explain to us a little bit more. But this is just kind of the deep dive I found myself in just recently after really looking into what's going on with all that crazy SEC infighting. But very, very interesting stuff, and we're hoping it's going our way. And the final thing I really want to talk about before we just open it up to questions and all that good stuff is crypto. Crypto running like a madman. Bitcoin hit 6-month high as first Bitcoin futures ETF BITO starts trading. The ProShares Bitcoin strategy exchange traded fund started with 20 million of seed capital, and it is now ripping. So remember this ETF, basically think of it a basket tracking various things. This particular thing is directly tracking Bitcoin futures, not Bitcoin itself, but Bitcoin and Bitcoin futures are highly correlated. They commonly move in lockstep, but just understand, when you buy it, that isn't actually buying Bitcoin. It's not like you buy $50 of this ETF and they go out and buy $50 of Bitcoin. In fact, it's Bitcoin futures. So it's the difference between cash settled and physically settled. If you want that direct exposure, what you're looking for is a spot ETF. Those are physically settled, which is direct ownership. And Grayscale is looking to, I believe, convert their GBTC, which is a kind of a crypto trust, into a spot ETF. They're looking to file for it and hopefully it's rocking by the end of this year. But more in the short term, there are 3 other applications, or maybe 4, but definitely at least 3. It might have been 4 in total. And another Bitcoin futures ETF might get rocking this week. And the way BITO is being run by ProShares, this one that's looking to go would be by Valkyrie. So there's just a lot of positive sentiment, potential new IRA money flowing into crypto, and it's more accessible. I think that helps a lot. So it makes sense to me right now that crypto's running like an absolute madman. Here's BITO, opened up at 41-ish, ran all the way up to 42, came down to 40, and right now we're at 41.60. So BITO, this is the ProShares one. We're looking for the Valkyrie one to come out this week, and hopefully the Grayscale one, the spot, the ETF, comes out very, very soon. But overall, we're seeing more mass adoption for crypto, specifically Bitcoin, between the American public, US regulators, US government. And with this acceptance, it makes sense that we're seeing all these things go up, because inherently every single step of acceptance, it kind of mitigates some of that risk. So those are all the main things I had for you. The SEC infighting, what's going on with Citadel versus IEX. Obviously, I'm in high support of IEX. I have really nothing to do with them. These are just my own thoughts on it. It's not like I have IEX equity or anything like that. They didn't ask me to say this. This is just, hey, I see Citadel is once again at their game of bullshit. And I feel like my channel, in a certain sense, has almost become like the main argument of it, or the main purpose of it, is just to call out bullshit where we see bullshit. And this is one that the case is getting rocking in 6 days. So I'm definitely going to be paying attention to that. And crypto's running right now. Our stocks, AMC is down 3% on the day, currently trading at 41.70. GME is up 0.3% on the day, trading at 187. I'm right there with you. Obviously, I want every day to be a green day, but don't forget, 4 green days in a row. Is it okay that we ran into serious resistance and we're taking a breather? Of course that's okay. That's a natural ebb and flow cycle of the overall market. This does not surprise me at all. Literally in yesterday's stream, various times I told you, don't be surprised if we get rejected at 44.20. I call that 44.20 as a very short-term target. I've been calling that out now for 2 or 3 weeks. Yesterday I was telling you it's serious resistance. We've run for 4 days straight. Don't be surprised if we need to take a bit of a technical breather. Adam Aaron on Fox. All right, let me get Fox Live. Watch.
Because, Brittany says she wasn't there for her. Brittany says she was...
I'm pulling it up. Why can't I find it? I should probably... what show is this? The Clayman countdown? I think it's the Clayman countdown.
Earn this.
Sounds like an ad. Let me sign in. Already have an account? Sign it. Why can't I find this? All right, let me get this up. BITO. Is it on the Clayman countdown? Is that the right show, everyone? Because she's talking about Bitcoin. All right. Yeah. If Adam Aaron comes on, I'm listening to it. I know you guys don't have the audio, but if he comes on, did it already happen? Adam was on CNBC. Great interview. Someone said that he was on. What are you guys seeing? Did he tweet out that he was doing this? Let me find Adam Aaron. Did he tweet out that where he was? I'll try to find the clip for everyone. Adam Aaron. Nope. Don't see it there. CNBC. Do we have it here? Not seeing it there. Does anyone in Discord know actually where it was? Real Me Timbers, Mr. Boule, shout out. Actually, as I'm trying to find this, Tilray. Tilray confirmed Tuesday the expansion of its leadership team with the appointment of Blair MacNeil as president of Tilray Canada. So Tilray expanding its leadership team. Democratic senators bill would let DC legalize marijuana sales against Biden's wishes. So looks like some potential developments, positive development. Did this come out today, an hour ago? All right, let's see what Adam Aaron had to say.
Actually, what a wild ride AMC has had since this pandemic hit.
You think?
A year and a half ago, we fought for our very survival in 2020, and we won that battle. And in January of this year, we were able to say we made it. Now, our business wasn't back, but we had raised billions of dollars to survive whatever the pandemic would throw at us. And then this year, it's actually millions of retail traders have descended on AMC. We have over 4 million stockholders now. They have small positions on average. But when you add them all up, it really is the evidence of the democratization of Wall Street. All the conventional wisdom, all the experts, pass them aside. It's the individual investor who now owns AMC. I work for them, and when you talk about the rise in our share price, and I hear so many naysayers say, well, look, back in 2019, your market cap was X. How are you ever going to get there? And they predict our stock will fall. Look, there's only one thing I'm certain of. Stocks rise, they stay the same, or they fall, and nobody knows which way the future comes. But what I do know, what Jim Cramer has been kind enough to say about AMC, you don't drive a car by looking in the rearview mirror. You drive a car by looking through the windshield and looking forward. And you shouldn't look at what AMC was in 2019. Because
Why not? Because let's forget about COVID, can we? Because let's, for a brief moment, the movie theater business was in decline before COVID.
Well, actually, a couple of things there, because that's a big and important question, Brian. The movie theater business was not in decline before COVID. In fact, the industry box office, which is the measure of the health of our industry, has been growing for 20 years. It's been growing by the combination of price and volume of tickets sold.
Correct, not the amount of proliferation of theaters.
But we don't measure our success by the number of theaters or number of attendees. We bank dollars. And the box office was growing and has been growing for, I think we had positive box office for 17 of the last 18 years. Now, having said that, it's hard to put COVID aside because we are dealing with COVID. And again, naysayers about AMC, quick to point out that we're not yet back to 2019 levels, pre-pandemic. And we're not. But we're so much stronger today than we were in the third quarter, in the second quarter, in the first quarter. And in fact, the 14 days that we just came through, October 1 to 14, the first 2 weeks of this year, is the highest 2-week box office that our industry has seen since February of 2020, 20 months ago. That's good news for us. It feels to us that we're on the way back. But the question is, where do we go from here?
Yeah.
We have absolutely no intention of just bringing back the company that existed in 2019. because we raised so much money, our shareholders have armed us with what was, at the end of the second quarter, a $2 billion cash war chest, a cash and liquidity war chest, to go out and transform our company. And we have several big ideas that we're working on right now.
From what to what? Give us we've heard about football games. I'm a Charger fan. I live out. I can never watch the games. Can I go to an AMC theater soon and watch the Chargers play Tyler's Washington football team?
You can, at some of our theaters, watch some NFL games each week. We are in discussions with the NFL right now to broaden our rights so that we could show all the games that we want to show as opposed to some of the games. But
where are you in these negotiations? Can you give us a little hint?
Early. We're showing NFL
But you're
games.
talking.
We're showing NFL games right now, but we're early in our discussions with the NFL about broadening those rights. But we've talked about professional sporting events. We're showing some UFC events and some WWE events and some professional boxing events. We're showing the Metropolitan Opera. We have something for everybody. We're showing concerts now.
Yeah.
And we're talking to some of the largest music companies in the country about expanding our concert offers. But that's just beginning, because what that's doing is still expanding our theater business.
Yeah.
I think that there are other businesses related to what we do now, related to our expertise, that are entirely different from what we do. We've made a lot of noise in the last few months about getting hyperactive in cryptocurrency. And there are a lot of reasons why AMC could be a successful issuer of cryptocurrency as well as a redeemer of cryptocurrency. And that's just one of the half a dozen ideas that we're working on right now.
One of half a dozen
Today's
ideas.
10% run.
I like that. I like that. I have the Liz Clayman one up. I see right here that Adam Aaron's coming on in less than 2 minutes. So I have that up as soon as
pharmacy too.
As soon as we have that, I'll play it. We're just waiting for some of these to end. But I like that. I mean, we've been talking about the expansion of AMC as a business for quite a while now, and I love that he's getting into cryptocurrency.
Hello, my name is Angela Roberts, CEO of U.S. Money Reserve. On behalf of our entire company, I'd like to thank you for your continued support of the United States Money Reserve. This year, we celebrated 20 years of help.
Waiting. Anywho, like you said, they're getting into NFL. They're getting into professional boxing. They're getting into UFC. They're getting into concerts. They're getting into operas. They're expanding just beyond watching a movie. They are taking this absurd opportunity that honestly the apes had given them, and they're using it to improve the business. That is incredibly smart, and I want them to be successful. Who would root for a company to fail? That doesn't make sense. And obviously it takes time. Like you said, we're already doing some at NFL, and they're in early talks for additional NFL viewership. But hey, I think the numbers are going to work for everyone involved, so why would they not do it? Sometimes you just have a blatantly good business decision, and that's just the NFL. I mean, you could talk about the NBA, the MLB, soccer, like all of the sports. Why not, when there's a major sporting event, why not include it on the big theatrical experience? Like, it's a no-brainer to me, and I think it's a no-brainer to a lot of people. And that's just some of the things that they're doing. But I think we're also seeing a build out in crypto. So smart. Bitcoin Cash, Litecoin, Ethereum, Dogecoin. Now people are even pushing for Shiba. All that is very, very smart, especially in the short term when we're talking about inflation and what is or isn't going on with that. I am a huge fan of crypto. And hey, Bitcoin's running, Ethereum's looking good, Shiba's a little bit flat, Cardano's a little bit fat. Right now, Bitcoin and Ethereum are looking phenomenal. I don't have it up, but if you want some, it's so easy. Voyager. These are all the coins that they have.
At AMC shares, they are moving higher right now. Charlie Gasparino is at the annual Milken Institute Global Conference in LA and managed to grab AMC CEO Adam Aaron just a short while ago and break some exclusive news for the Clayman Countdown. But first, Charlie, you've got some more news on that SEC lawsuit filed against Ripple from Ripple CEO. Tell us.
Yes, Brad Garlinghouse. I can never say his name quite right. Good guy. We spoke to him yesterday. We asked him about his suit in the context of what's going on with the Bitcoin ETF and what the SEC is doing in terms of regulation. Listen to what he had to say.
I think it has had a stifling effect here in the U.S. Hopefully when we get to the end of this, there'll be certainty and clarity. And frankly, it could be a very positive thing for the XRP ecosystem and community that it's the one crypto where there is clarity and it is certain.
Do you see a settlement of your case in the works?
Look, I would love to spend less time on this and be able to move forward. The one thing that Ripple cares about more than anything, and really for the whole XRP ecosystem, is that there's clarity going forward that XRP is not a security. If that's not in the cards in a settlement, then there's nothing to settle.
Well, there you see it. I think, Liz, I think people at Ripple are actually annoyed that the SEC is approving a Bitcoin ETF while they're attacking their XRP and Ripple. And as you heard, no settlement unless there's that very fine point that XRP remains a currency and not a security, thus outside the SEC boundaries. Let's go to Adam Aaron. Fascinating conversation I just had. That was the best thing about Milk and Liz. You could just talk to people. They're walking by, and we ran into Adam, and it's interesting. What he said is this. He goes, AMC, the theater chain, is going to be a different company in the next year. It's not going to be purely theaters. Now, I tried to get out of him what it is. He promised to go on the Claimant Countdown and talk to you and I about what exactly those changes are. But he told me within the next couple of weeks, AMC is going to announce a meaningful change. It was the words he used, meaningful change in its business model that will tip the hat on where they're going in the future. So it's fascinating. He did talk about the AMC ape community. I get a lot of gut from them. He basically says they're the reason why they're going to be able to make the changes. The fact that they rallied behind the stock, they've given him capital, $2 billion in capital. He can grow the business. He can build it out. He can change it, and we're going to see where he's going with that in a few weeks. He also thanked me, believe it or not, for some of the comments I've made about him, and this is where he and I agree. I think he's a very good CEO. I think if anybody was given a horrible hand, he's looking at streaming, which obviously hurts his theater business. He's had a pandemic, which is still going on, which obviously hurts. He's done some incredibly innovative things to keep things together. And you know what? He's not a BSer. If you read what he says, he admits the stock, based on historical trends, is way over. It's trading at way too high of a price, and there's a risk here, and there's a risk here, and there's a risk here, and so he's very forthcoming about that. But he did say this. He said, "Listen, Amazon wasn't built in a day," and we went back and he said, people used to say that Jeff Bezos back in 2000 had a portal for a bookseller, therefore the stock was only worth $6. But as you know, it's worth a lot more than $6 today. He said, try to imagine. He goes, I'm not saying I'm Jeff Bezos, but try to imagine that's where AMC is going to go. I'm going to change stuff. I'm going to innovate. And, I believe him. I mean, I think he's very smart. You look at the moves he's doing. It's really smart how he's trying to fight to survive. And, I will say this. No other CEO, I think, in America was dealt the sort of hand that he was dealt, given the pandemic and streaming. I mean, that's a 1-2 punch. Yeah. And he's still kicking. Yeah. Now, part of it is based on the apes, and he acknowledges that. But he's just not sitting there on his hands,
Well,
And,
I don't know if you heard,
he's
Charlie,
not touting the stock price.
But we had Jamie Rogozinski, who founded the Wall Street Bets Reddit room, at the top of the show. He's insulted by the SEC's indication in the report, which I have right here, which basically blows off the apes' efforts and the fact that they chased a lot of shorts away, and the fact that AMC is up 1,865% year to date.
By the way, I read the report. I don't know if that guy read the report. This is what the report really said about the apes, and Adam would agree with this, I think. There is no short squeeze in AMC. If you want to go and you want to buy this stock because you believe the mother of all short squeezes are coming and it's going to explode, you're probably just throwing money away. If you want to support the company because you like the company and you think Adam's a great CEO, that's another thing. But that whole short squeeze notion did not play out really in the meme stock. By the way, that report also said that this notion of naked shorting is a bunch of malarkey.
Right. But Charlie, let me read you a line from the report.
But they shot down
Let me read you a line from the report.
Another.
The report says the media characterized trading in GameStop as an act of rebellion intended to humble short-selling professional investors who had allegedly targeted the stock. What part of 130% of the float being shorted at GameStop is alleged? I mean, that to me is right away skewed.
She has a good point.
No, but what does that mean, Liz? You know, people need, I'm not saying you, but maybe you too. You need to understand how markets work. By the way, one share
what part
of
of 130% of a float shorted is alleged?
Well, what do you mean? Why? What do you care whether it's alleged or not?
Well,
I mean,
that's a loaded word. The SEC is saying that allegedly.
The whole report is a loaded. The whole report is a loaded word. If you read what they said, I think this was one of the strongest part of the report. What they said was the conspiracy theory, and this is after tons of analysis. And by the way, Gary Gensler would stop screaming in my ear. Gary Gensler would like
I'm not saying
to
anything.
crack down on the, I'm just telling you this. That report shot down every conspiracy
theory. Yeah, but
theory.
it pumped up the gamification, acting like these retail investors are stupid and they're distracted by shiny objects.
No, it didn't. It didn't.
Yes,
it said they liked the stock. Stop it. I read the thing twice.
So did I. I have it right here.
Did you read the report?
Okay, now I'm getting yelled at in my ear.
Just because you have it right here doesning mean you read it.
Oh, okay.
Go back to Aaron and Aaron. Just keep looking at what Adam's going to do, because he's going to be making news in the next couple of weeks, and I broke it on this show.
Charlie Gasparino live from Beverly Hills in the Milken Conference. We're coming right back. Don't go away.
Well, if you don't laugh, you're just gonna scream. Honestly. If you cannot laugh at Charlie, you're gonna end up screaming. And unless you have high equity investment into your local heart doctor, you better be laughing, because your heart health, it's not a joke. It is not a joke. Do not. And I know I myself am an abuser of this, a victim of this. I let my blood pressure go way, way too high when I hear that ding dong open his face. That's fascinating. This is mainstream media. What is the bar to get on mainstream media? Is it just, did no one else apply to be a pundit or something? There's so many things we need to unpack from this. So Charlie Gasparino an hour ago at CEO Adam tells me there are big changes to AMC Theaters' business model coming. We'll have more at 3:45. So even that one tweet, we have so many things to go through here. That one tweet, that one tweet, we'll have more coming at 3:45. My question is, what was more? He just said, he reiterated his tweet. That made it to national television. He literally just said, Adam Aaron told me more is coming. He just reiterated his tweet. That was good enough to get on national TV. And I did not know if Liz Clayman was on our side or not. That was hilarious. That's such a good point. She brought up a very, very valid point. Allegedly being attacked by shorts. What is alleged about 130% short interest? And then he's like, they just don't know how the markets work. What is this? This is a funny farm, folks. This is a funny farm. You have freaking Farmer Charlie there in charge of just his own crazy thoughts and comments. What's beautiful about this? Very honestly, what's beautiful? Do you think he works on these beforehand? He's like, oh, this line is a load of bullshit that I'm gonna it just comes to him so naturally. These absurd comments. She caught him for a bit there. She's like, what do you she hit him with too much logic, and you saw him like short circuit, like rewind the video. You could see his brain start to fire. He's like, oh wait, shit, that's a really good point. I don't think he was prepared for Liz to like hit him with a little bit of like logic right there. Like, what is alleged about 130% short interest? How is that not being attacked? And she's like, like he just freaking lost his mind there. That was good. I am super, super happy that we got to watch that. That made me laugh. That was good stuff right there. Maybe I have to reevaluate my opinion on Ms. Klayman. I think I might have to, because man, I thought she was against us. I really, really did. And then I don't know. She's just dropping the hammer on him. That was perfect. I got to tweet at her or something. That was so fun. Here you go at Liz Klayman. That's hilarious. $130%. Here you go, Liz Klayman, allegedly used to convey that something is claimed to be the case or have taken place, although there is no evidence. Wow. That was hilarious. Seems like proof to me. Proof to me. Good stuff. Hey, you gotta call him out. You gotta call him out when you have him. I just threw this quick tweet at her. Hey, Liz Klayman, allegedly used to convey that something is claimed to be the case or have taken place, although there is no proof. 130% short interest seems like proof to me. Good stuff. Like I said, I didn't. Whoa. Bitcoin running into close right now. We are $500 off of an all-time high on BTC. Makes me very, very specifically excited that AMC is about to be accepting it. I love that. I love that. All right, AMC, let's close the market now before this thing goes down any further. Let's close this now, and then we will do the old market wrap up. That old ditty. Excited. I'm excited. You should be excited. We're all excited. Bitcoin FOMO is back. All right. Feels like it. Hey, if you want to hop in on some crypto, don't forget, you can easily get it, even as long as you're not in the state of New York. But check out Coinbase, check out Gemini. I like Voyager. I think it has like one of the best UX, but I use all three. You can also check out Binance. There's so many others. Just put in that code MAT21. You'll get $25 of extra Bitcoin as soon as you trade $100 of any crypto. Ding, ding, ding. The casino is closed. Folks, that's what I have in store for you today, Tuesday, October 19th. Here's what you need to know about the world. AMC closed out the day at 40.80, which was a drop of 5%. GME closed out the day at just below 187, which was a small gain of 0.4%. On the bigger picture, is that reason to worry? In my humble opinion, not really, because ever since October 13th, we were up 17%, 18%, and now we're still up 11%, and that's from October 13th until now. Hey, we gap filled. I've been calling out that gap fill endlessly for the past couple weeks now as my short-term target. That's exactly what we hit. We finally hit the gap fill from September 17th until September 20th. That gap, we finally filled it today. What I'm looking for next is for us to create a nice support. Who knows? Maybe that support's going to be created at 40. That's a major support level I have, but of course it could be created higher. I'm looking for a base and a movement back up. That would create a very nice cup and handle scenario. Overall, I'm looking for the breakout of 44.20. Then I want to watch 47.50, which would align with this trend line breakout. And from there, I'll be watching 53. Overall, I would argue that this breadth in AMC's price action most likely predicted. I mean, heck, a lot of people were predicting it. That was just quite the run. You're not going to always have green day, green day, green day. That is not a natural cycle of the market. We pushed, we're taking a breather. Hopefully we take another push very, very soon. I still very much like what's going on in the MACD. The moving average convergence, divergence, I like that it's green. The golden question on AMC right now is how long will this bullish, apish momentum be sustained for? In terms of the Ortex data, here's what you need to know. There was a net return of 2.16 million shares on a borrow of 2.7 million. The short interest is estimated to be 16.6%. Utilization just below 85%. Shares on loan after today, probably around 107 million. And just so you know, the average age of these shares on loan is 75 days. And the cost to borrow of that 75 days right now coming in at 1.3%. In terms of GME, can't stop, won't stop, GameStop, almost had the breakout today. We had this nice wedge pattern, higher lows, same high between 188, 190, almost got the breakout today, fake out, breakout, still looking for that. After that, I'm looking for the key psychological level of 200. But really, ever since October 6th, GME has been on the up and up. And I like the coiling. It feels like we're building up a lot of potential energy, hopefully turning it into kinetic energy very soon on this explosion. Fingers crossed for that explosion up to 200. That's the next main level I'll be watching. But I wouldn't be surprised if there's a bit of a hiccup at 196. In terms of GME, net borrow against it today of 197,000 shares on the borrow of 650. Estimated short interest is 12%, utilization 35%. Shares on loan after today, probably coming in at 8.25 million shares. So that's your quick rundown on AMC, GME. GME very, very flat and honestly, since 10 a.m. this morning. It moved for the first half hour a little bit down and then it was flat. AMC sold off flat and then sold off into close. Obviously, that's a little bit disappointing, but hey, we had 4 green days. We can handle one little drawdown day. What we're looking for is that support to be made very, very soon and then to bend back off of that. And days like today, I think that's the reminder of to not get too insanely overzealous about what is or isn't happening in those weekly options. Whenever I see options, I don't want people pissing away their money on just those lotto bets. Give yourself time. I think a solid rule of thumb is whatever time you think you need for an option, double that up. I think that's a very good starter. So that's your AMC GME specific update. In terms of the overall market, the S&P 500, great day. We're up at the next level of resistance. This thing has just been crushing it. We now have 3 gaps below it. I do think eventually these gaps will get filled. But first, to play those gap fills, which is probably best to go long on volatility or just get puts on SPY or short SPY, whatever you want to do. Be careful, just make sure you're actually seeing weakness. The opposite of catching a falling knife is trying to catch an exploding rocket, and that's exactly what the SPY's been doing. So don't be like, oh, I got to play the gap fills right now, because there could still be strength. Wait for weakness to actually happen. And in the meantime, from a seasonal perspective, it's just ripping higher. Seasonally, looking good. Earnings announcements, looking good. Oil, higher. Bitcoin, higher. There's a lot of reasons right now that I would be afraid to bet against it right now. With that being said, I still do think all these gaps will eventually be filled, but I'm not saying, oh, that has to happen tomorrow, because right now there's a series of very good earnings reports. In the tech heavy Qs, we're pushing. Next resistance I'm looking at is 378 and some change. That's what I'll be watching. We also have one major gap there. Unfortunately, the Russell 2000, which is interesting just because AMC is the main stock within that, a neutral day. It was slightly positive because of a gap up, but you had this doji candle day, so not much going on there. Looking for the breakout of 228 and then hopefully a breakout of 230, but not much movement in the small cap sector today. So those are your major markets. Let's see what oil ended up doing. Oil, you want to go to the front month. Another green day, $82. Oil is just ripping. Not that long ago, it was at 62, currently trading at 82.28. The recent high is 83. Putin, the guy from Russia, recently said he wouldn't be surprised if we're at 100 in the near term. And the way it's just trucking along, I wouldn't be surprised either. We're having low supply, high demand, classic thing that could push equilibrium higher. In terms of Bitcoin's looking great. BITO came out today. That is the Bitcoin futures pro share coming out. Social sentiment, amazing. IRA money, you could argue it's going into it. Accessibility going up. I would not be surprised in the slightest if by tomorrow morning I'm talking about Bitcoin at a new all-time high. We are in that territory. The all-time high is $700, $800 above where we are right now, $800 above it. Very, very impressive. We're at 64K. If you're in crypto, congratulations, you're making some money. Looks like Ethereum is trailing a little bit behind, but this is also looking hungry for an explosion. So if you're in BTC or ETH, congratulations. If you're trying to get in crypto, check out Voyager, Coinbase, Gemini. Those are ones that I have bonus deals for you. Other than that, there are very other good ones. Binance, KuCoin, Kraken, Uphold, Gate.io. Those are all pretty respected. Just I would recommend using a main one that many other people are on just for safety purposes. So Bitcoin looking very good. So those are your market breakdowns. In terms of more of the general narrative of what's going on, I know many people are disappointed in the SEC report. It seems like it didn't really uncover anything. I'm right there with you. And now I'm starting to think that it could potentially be because of a political faction that's prompting infighting, which essentially ended up muddying down and neutering the report that we actually got publicly. And I think that's also leads me to believe of why we got it so late. So, I mean, I talked about it. What was it? Heather Pierce and what's his name? Elda something. Those two commissioners, check it out. They released something. It's on the SEC website. It seems like they're kind of going against us. And my personal assumption, this is just my own opinion. I do not have the evidence of it. It smells like to me they're trying to play nice with the private industry. So when their SEC career is over, they can move it there, add a couple zeros to their paycheck, and they were always playing nice and they have that SEC connection. That is my assumption of the scenario. So that's what's going on with that. In terms of IEX versus Citadel, no surprise, Citadel is against what could be beneficial to the overall markets, to private traders, retail traders, banks, pension funds, ETFs, all of those things. Citadel is against anything that could potentially hurt their bottom line. They are a big beneficiary of latency arbitrage. IEX is against it. Once again, they are taking them to court. The court case does appear to be starting Monday, October 25th. It's all related to D-Limit. I'll make sure to post the D-Limit clip on the Kohrs Lite channel later. Don't forget about Kohrs Lite. That's where a lot of the clips from the stream go and all that extra content. Obviously, it's still free. But overall, that's kind of what I have to you today. Interesting developments across the board. Crypto exploding. AMC not the best day. GMA a flat day. But overall, a lot of movement, and it does make me particularly excited for whatever might be coming next. A little bit more development on the way that I'm trying to go, beyond learning about this D-Limit thing, which I think is incredibly interesting. During break today, I spent a lot of time. I've been working on this draft letter, and I've been sending it out to as many government senators, representatives as I possibly can. And as soon as I have any development there, I'm wholeheartedly trying to get conversations with governors, senators, representatives, anyone that's willing to listen, because I think this is a bipartisan issue. And the more Democrats, Republicans, independents, whatever you want to be, middle of the road extremists, I think there's a lot of reasons for all of them, for them to fight for us. We are numerous. We are a large voting bloc. If we show up and we vote in the people who can actually make change, I think that's one of the most legitimate ways to improve the market. And I would not be surprised in the slightest if a side effect of that is the MOAS, as soon as we kind of get out all this cancerous manipulation that goes on in the market day in and day out. Overall, thank you for your support. You guys are absolutely phenomenal. Every single one of you. I truly appreciate it. It's our community. It's all of our voices multiplied together that's gotten us to this point. And I just don't think we stop here. We didn't come this far to only come this far. Let's just keep our heads down and keep trucking forward, because I think this is a worthwhile fight. And I think we have truth ethics and morality at our back. It just might take a little bit longer than we want it to, but I think we just need to keep on moving forward. Once again, thank you for all of your incredible support. Before you head out for the day, if you want to help me out with the algorithm, it would be greatly appreciated if you could drop a like if you enjoyed the content. And if you want to be a member of the Moon Gang, where we talk about stocks, options, futures, crypto, and just basically all of my Matt rants, if you want to hit that subscribe button, that would be greatly appreciated. Liking, subscribing, completely free. If you don't want to miss any form of content, go over to that bell icon, click on it, switch it to always, and you should theoretically get a notification whenever I go live, just so you know. If you're on Twitch, don't forget to follow. If you're on Rumble, the sub, and you want to drop a Royal Rumble, all that stuff very much helps me out. But if you don't want to do that, I get it. I get it. I just want to thank you for your general support and your enthusiasm. Even if you just brought the good vibes today, that goes a long way. It really, really does. So I hope you have a phenomenal afternoon, evening, night, whatever time it is for you. I hope you have a good one. I will catch you tomorrow morning, 9 a.m., bright and early. And don't forget, some of these extra clips and explanations will get posted on the Kohrs Light channel. But until I catch you next time, from me and Chair, best of luck in the markets.